Hello, thank you for joining us and welcome to the Stellar Woman Show, the show that brings you thriving women stories, knowledge, and experiences so that you too can learn one or two things, be inspired, make a change, and thrive in your life. My name is Stella Olivia Kikoya, and I'm the editor-in-chief, the founder, and the host of the Stellar Woman Show and the Stellar Woman Magazine. And today we have a thriving woman, and also today's particular show is a business spotlight. And we are going to be bringing you more knowledge regarding the financial situation and how you can enhance your business and how you can enhance your own life. And today's show brings you a thriving woman, a woman you could have had me mention here and there, a great supporter of the Stellar Woman magazine, a contributor, an expert contributor within the money and business section. And her name is Monica Bradley. Monica, welcome to the show.
Thank you very much, Stella. And it's really great to be here today and join you on this fabulous forum to get some knowledge out to many people across the world.
Yeah, thank you. And Monica is the founder and MD of MB Associates in Chim here in the UK. MB Associates is actually a multi-award winning mortgage broker here in the UK. And Monica is going to tell us more about what MB Associates is about, when it was founded, and what it brings to you in the business world. But in particular, today, we shall be talking about two different aspects, and we shall start with getting a mortgage in the current market climate. So Monica, kick it off. Tell us more about what MB Associates is about and how you came to be in this business and what you do for your clients.
Thank you, Stella. Thank you. Well, I started this back in a long time ago in 1989, and I had a real passion for it then, if I'm honest. I had this real passion for helping people, I guess I will say. So it was all about learning the different aspects of financial services, giving advice. And in back then, I was very much into not just mortgages, but all aspects of pensions and investments and looking after families in protection. But my real passion came when I opened some different premises in really just after the 2000, and I became very well known then for the mortgage broker. I had a few nicknames called Monica Money and Mortgage Money and Monica Mortgage Money and all those things that came with that. And it very fast grew into something that clearly was about people and people wanting to get the right advice and honest advice. And so it's really grown from there. And of course, now I've got a fabulous team of advisors that work with all our clients, because it's a bit like a tree, Stella, when you think of a tree that comes out of the ground and starts growing. Well, that's exactly what the business has done in terms of the different branches come out from different, and then the branches grow on branches. And really, that's exactly what's happened, A, with the business, but B, with the client bank. And I think what fundamental I'll say about it is that we've dealt with the same clients over many years. And what's fantastic about that is, you know, I've got a team of people around me also that have been with me a long time, and that builds trust with people. That gives people the feeling of being able to come back, talking to the same voices, trusting the people they've dealt with, referring their family and generations. I've got some families, I'm on the third generation working with their clients. So really that's what we do. And fundamentally, as you said earlier, I'm talking really, we're mortgage brokers, and we do all aspects of people borrowing money. So borrowing money to buy a first property. remortgaging a property, so making sure that you're paying the lowest amount of interest for the the full duration of your mortgage, not just for 2 years, 3 years. So really understanding what the banks are offering. And clearly we're in very different times to where we were in from 2007 and 2008. And I think we all know that the world and inflation is a problem and has been a big problem and talked about all over the world, Europe, America, obviously the UK. We're talking about high levels of inflation, the cost of living, a fundamental impact, and the highest interest rates since we've seen since 2007, 2008. And really, when you think about this, if you think about this all over, that people who are maybe in their 20s and 30s, they won't have seen higher interest rates. So this is a real shock to a lot of people who are borrowing money. And that borrowing money isn't just about, maybe house purchases. It can be car finance. It can be your credit cards. It all does affect the amount of interest you pay on your borrowing, whatever your borrowing's for. So I want to just share a few things today about what you need to think about and what really happens in the real world when you looking to purchase a property, looking to purchase an investment property, maybe looking to remortgage, maybe debt consolidate, maybe look to remortgage to home improve your house. But it's just about people and really understanding just what the banks really do want, because it's a very, very different aspect, I think, when you apply directly to a bank or when you use maybe a broker. And I'm going to talk a bit later on about the benefits of using a broker. But it's fundamentally just helping people understand what preparation and what really things that they do look at, because I certainly from my experience over the last many, many years, I think people's perception of what a bank takes into consideration and what really happens in the real world are two very different things. So I'm happy to go on and talk about that.
Yes, Greg, thank you so much. And I think it's the right time. We are very fortunate to be actually interviewing you, because there's a lot of anxiety at the moment, just beyond women, families, men, everyone is anxious. The state of the economic situation is not one that is enabling people to see clearly on how to go forward with all those aspects. First of all, even getting a mortgage or remortgaging. Everyone feels like they're either going to have to be stuck, or actually they're not seeing that there's any clear aspect that can come out of the situation for them. So it's important that we get your expert knowledge to see whether there is a way through in whatever situation we want to go into. So thank you, and please go ahead and tell us more about the options that we have and how we can benefit from them.
So what I'm going to say is, I think whenever you're looking at any type of borrowing, and as I said earlier, if it's a first-time buyer, or you're just simply thinking of buying a bigger property, or equally buying a moving down market, you might be at a certain age where you think, actually, we want to downsize now and have some money in the bank. We just want to have no mortgage maybe, or you want to have a small mortgage. But it's just understanding really the preparation that you need to do individually. And I think what that really involves is understanding that any type of credit or commitments that you may have will be taken into consideration by any financial bank that may be lending, so building societies, banks, because the wonderful thing behind this is all the credit agencies now that keep the information on what people's borrowing are. So often people might just say to me, well, yeah, I have a credit card, but actually I don't have anything on it. Well, with credit agencies, this is a really big thing, actually, when people apply for any type of loan, that if perhaps you've paid a credit off 6-8 weeks ago, that probably hasn't updated on a credit file. And quite often people use the credit card and do pay it off monthly. But whatever happens, it's us just understanding that actually that is taken into consideration, and that information talks directly to the first process. So the minute an application of any point is put into a bank, it's like if you apply for a loan online, that mirrors and goes into the affordabilities and basically will look at what is outstanding on your credit cards or your personal loans. And whether we like it or not, that information is readily available, and it's updated by the banks to the credit agencies on a monthly basis. So if there's anything such as a personal loan, any car finances, even if it's a car lease, where a lot of people don't realize that they've got a lease on a car, and often there's a balloon payment that's payable, that's taken into consideration. Any amount of credit cards that's still showing as there, any sometimes you've got a mobile phone, which isn't such a big problem, but it's really things such as ongoing commitments that the bank will see, and that will have a fundamental impact on what you can borrow. So it's about understanding that if you have got any of those, it's about saying, well, look, is this going to affect what I can borrow, and how much is it going to affect it? And are you in a position to pay it off if you need to borrow more money before such times as the bank goes in and performs that credit search along with the application at the initial process? So that's number one thing that I would really say to understand. But secondly, all such things as a bank always asks to see your bank statements, and it won't be too long before something called open banking comes, where basically they'll be able to see that from their end, because all this technology is changing. So it will get less paperwork, and it will be more transparent, and they will see that. But what you need to understand is any type of borrowing, whether it be your car finance that you want to take, or your house, all this individual outgoings that you pay will be taken into consideration. You might be paying school fees for your children. You might have some nursery fees. There could be maintenance if there's been a separation, and these are all taken into consideration. So it's about understanding what you can borrow pre getting disappointed, should I say, because quite often people do it the wrong way round. They might go and see the house of their dreams. They might go and find a property, and predominantly us ladies like to view, and our hearts might say, actually, I really want to buy that. I've seen the house of my dreams. And then they do the homework on the financial services afterwards and find actually we're disappointed because we can't quite get to that figure.
Oh, yes, definitely. I think I'm one of those ladies. I would always look at my dream house. Okay. So that's good. Are you going to tell us more about the other options? So for example, if you're going to remortgage, those options, what are those things that we have to look into?
Yes, very much so. I'm going to do that because I'm really passionate about this. I've been very passionate about this for a long time now, and actually I'm going to say that my clients expect me to come back to them 6 months before. Perhaps they're in a fixed rate or in a tracker rate, and they expect me to come back to them, or one of my team, because that's what we do. So we're basically making sure that every client pays the lowest amount of interest, because interest is a fortune over many years. And I don't know if anyone's ever calculated just how much interest that people are paying, but interest is the biggest thing that eats into our disposable income. And I think enough people don't see the benefits of just what is happening with compounded interest and really understanding that. So in terms of your, remortgaging, it's about making sure that you are basically on the lowest rate, because we have got a much higher bank base rate now than we did have. And it's been steadily going up now, and it's gone up substantially in the UK from 0.1 to 4.25. And we don't know whether there's going to be any more movement, but clearly the finance houses are watching very closely to where we are with inflation. And I know there's been some news out this week in the States that inflation is looking like it's going to be coming down, which is all good. And that's what we want to see. But in terms of it's understanding just exactly what rate you are paying on any money you borrow, because what you need to make sure is that when you come and see somebody like myself, it's understanding that let them look at what your debts are and what you owe and pay back the debt first with the highest interest rate. Because if you get to understand a little bit about interest, it's a fortune, especially if you work on credit cards. I do call them debt cards. I think you know that, Stella. I don't like the word they're credit cards. It's actually a debt card. And they come with very, very high rates of interest, much higher than a mortgage rate at the minute. So I would encourage people to actually clear them off first, unless you're working the 0% credit balances. But certainly I would encourage to pay them off. But really, I would say to everybody out there is to really take control of your lending on your mortgage, on your property, and understand what rate you're on, because there's different terminologies: trackers, fixed rates, variable rates. And realistically, we have got the biggest and highest variable rates that we have seen for a very, very long time. And if you don't take control of where you are with your mortgage and you let your rate come to an end, you could be paying 8 and 9%. And that's high, because let's be honest, people are borrowing more money now than they borrowed 10 to 15 years ago, because our house prices across the UK have gone up sky high. They've been going up. So the people borrowing money have had to borrow an awful lot more money. So it's about understanding and taking control and really know when that product that you're on for your initial borrowing comes to an end, and preparing for that. So I would say encourage people to make sure that you put it into your diaries 6 months before, so you can have a time to look at anything that you might need to pay off in order to be able to get the best rate on your borrowing going forward.
I love that. There was just so much. I was going to try to write down a couple of things, but since we are recording, I just said, no, I'll listen to this again. I love it very much, the debt card. But I think it also brought me to something you once mentioned. Was it cleansing? Is it money cleansing or financial cleansing? It runs into my head, and I thought that's what you are taking us through there. What is the terminology you normally use?
I did say that, actually. I did say it is about cleansing your finances, because actually what I think you should do is, and I do encourage everybody to do this, and we should all do it, but I know everybody's got very busy lives now, Stella, and people sometimes we forget. But I mean, in a world of technology where it's so easy, isn't it, to go on and get an app, just apply for an app because you're looking at this, and then maybe paying subscriptions to apps that you're not even using anymore. So when I say the word back, cleansing your finances, realistically, we should all go in, and not just go into your bank statements, go into your bank and look at the list of direct debits, the list of standing orders, and go into your phones and look in your settings and look at what subscriptions are you paying? Because so many of us forget, we're busy, we forget we applied to do this, and actually you might not use that app anymore. So it really is a really great exercise to get in the habit of doing twice a year.
So you are not just actually helping clients to just get a mortgage, you're just actually helping us to become more financially healthy anyway, in a way, because there's just so much information you're giving here. But the more we take in, the more we can help ourselves to put the money in the right place. Because if you're subscribing to something that you're not even using, most likely there's something that you want that you're not even affording. So it's using that skill set or having that mindset that you have to look after your finances the way you look after your body, and take care of these things so that you can be better off. So that was great. Thank you very much.
Very much so. Yeah, that is exactly what I'm doing, because just in terms of some of the little amounts that you can save, especially now, if you think about this, if you just took out those little amounts that you were paying, and they could be a 40, 50 pound, and another 40, 50 pound, and another 40, 50 pound. Well, guess what? I've been talking about higher interest rates. Well, let me tell you, if you just stop paying that 40, 50 pound, and you said, right, I'm going to remove that 50 pound from my current account and my everyday account, I'm going to look at putting that into another account, because interest rates are higher now on savings. So you've got to be really, really knowledgeable as well about looking, if you do make that savings and you do stop paying some of the things that actually, gym membership is a great one. So many people pay a gym membership and don't go to the gym. That is a real thing. And why do you think some of our gyms are loving to give lots of lovely big initial incentives to people existing? I know I get an email from my gym and say, tell your friends we're doing a really special offer for 14 days. And that encourages people to come in. It's good marketing. It encourages people to come in, sign up to a gym. And not everybody uses the gym. Lots of people go through different stages. As we know, there's lots of things in the health forum, in the gyms, that you can get involved in, but you carry on paying for it. So yeah, I'd say stop paying all those little things. It's so common. We see it often. And you know, I speak to so many people on a daily basis, and I can't begin to tell you, when we challenge somebody what that is on their bank statements, would you really know how many people say, I don't know what that is, Monica?
No way.
Yes, that is. And we try and actually get people to go away and find out what it is, and then they go, well, I didn't know we were still paying for that. So that just shows you a busy life, and you know, substantial amounts of different things coming out of your bank account that equally eats into it. So when I talk about the compound interest, compound interest happens on your savings as well. So it isn't just about the interest you pay. If you put money away monthly, it builds up in the same way. So it just makes you much, much, much better off in the long term.
Definitely. I like that very much, especially the all aspects, the financial health through the cleansing. And recently I sat down to my account, and I found it was good that actually something happened. Someone I bought from something ended up charging me twice, and it was actually in the US. And the good thing, I'm saying it was good, although it wasn't good, it was a big amount. So I immediately got an alert that something is not right on my account. How come I'm this low? So I had to go back. And when I went back, I thought, why do I have this charge at this point in time? And then I looked back, I thought I had completed paying this. Why am I having this charge again? So I found out that they had charged me again. I contacted them. They apologized that it was to do with settings. But I ended up thinking, what you're talking about, if it was a smaller amount, most likely I would have continued my life with it. Yet it would be actually penalizing me from compounding the other way around.
Yeah, very much so, Stella. And that just goes to show you, had you not have paid attention to actually that, that happens a lot. That happens a lot, in the same way as I've just been saying, people continue paying stuff that actually they're just not using. And so you're making lots of other people richer, and you're just, our hard-earned money that people work really hard for on a daily basis, especially now where everything's costing us so much more, absolutely everything. So that's a real classic example you've just given, Stella, that will, really probably go out, and lots of people can probably really think, actually, that has happened to me as well. How often have you gone into your bank account that you haven't had a refund you've been waiting for?
Yes, yes.
You haven't had a refund, or you've paid twice, and it does happen. So when I say you need to be checking, it's really vital that even if it's a 10-minute, routine thing in that diary, it's done on at least every couple of months for sure, just to go back, because the longer you leave it, the more you forget what that might have been, that transaction.
Amazing. Thank you. For this session, what would you like to summarize for all those people who are thinking about, maybe you could summarize it in regards to first-time buyers, or in terms of those who are remortgaging or taking investment, in terms of going into investment, rental investment, whatever it is, or property investment. How do you want to summarize this particular session in terms of giving people confidence?
I think what I'd summarize it, that's something that I think really reiterates to all those different things. So whether you're buying, whether you're looking to remortgage, because I think it's about really taking control and just being a little bit more financially aware of exactly where you're paying every penny, but also looking at any borrowings that you have and trying to get your head around interest. Because I think if I could teach people one thing, I would say, look, understand if you have got loans, because a lot of people want to build up to building wealth, but may have debts to get rid of. So I want to teach people about saying, understand by just making a little overpayment, if you can afford to it. So those £50 I was talking about, if you weren't paying that £50 subscription, try and get, and if you use a broker, and we're going to talk about that, try and get the broker to show you what that overpayment will do to your borrowing. It will substantially reduce the amount of years left just by making an overpayment. So it's kind of being clever with your money. And it just will make, I think, if I could teach people that about the long-term value of understanding interest and getting rid of your debt as quickly as you can. So that's what I would really like to end this session on.
Amazing. I hope we have been able, I've personally learned a lot in this session, and most of the things you've been covering, and I'm hoping that all the women that follow the Stellar Woman magazine have been capturing this content and can be able to capitalize on this knowledge, because we're here to transfer knowledge to all women. But we know that just if you empower a woman, you'll be empowering the world. So with that, we want to remember what Monica's completed it on, thinking about the interest, compounding interest, its effect, and making sure that you can pay off your debt as quickly as possible so that you can be more financially healthy, as Monica actually always says, being more financially healthy, so that we don't just talk about health in other aspects. And you also always hit on this, because your financial health goes into affecting your mental health and all other things. So there's all this spiral, and therefore just having a holistic approach in terms of understanding health and financial health is important. So thank you so much, Monica, for giving us this time. And this has been Monica Bradley for MB Associates here in Chim in the UK in Surrey. And we have learned so much regarding your mortgage, understanding your mortgage, and we shall be talking about the next episode, which will look at other aspects, and it will be mainly looking at the benefits of using a mortgage broker. Monica is the founder and MD of MB Associates, which is a mortgage broker here in the UK in Chim, where you can be able to find her. We shall be able to leave you the link on how you can be able to contact Monica and her amazing team, which we also managed to interview in our leadership issue, which is, I think, issue 7, where you can be able to learn more about how Monica actually inspires her team to do amazing work and have quality services, which has made her a multi-award-winning mortgage broker here in the UK. And I am Stella, I'm the editor-in-chief and your host for the Stella Woman Show. So thank you for joining us. Until next time, bye-bye.